Ayon Mukhopadhyay, my friend from London, is also coming down here to discuss his clients and to facilitate meetings of his clients with some of the very interesting companies they are hosting. Ayon, by the way, heads the European business of India Infoline and is based out of London. Ayon, wonderful to have you back in the city on my show. Talk to us about how are you mapping the market right now after the corporate rate cuts. Budget first instance did not sink in well. It was a cut because of long-term capital gains not being removed. But then after 3 following days was a big rally. How are your FI clients discussing markets with you?
Hello, good afternoon, Ajay. I hope you're doing good. Good afternoon, viewers. Yes, so it's a bit of a dichotomous, the market here. Initially, the budget was a bit of a disappointment, but again, as markets are, there was huge optimism built in around the budget. And I think the sell-off on the day of the budget was a bit of a dying of that optimism. But looking at the very fine prints of the budget and of course the RBI actions that followed after that, I think there is a renewed optimism, as what markets are, the renewed optimism. There isn't really a full faith that growth will revive to the heydays numbers that we had anytime soon. But if you look beneath the surface, I think people are very sanguine about the tax cuts, on the dividend distributions part, and even if earnings growth do not revive immediately, these are some of the things that can add cash to the companies. And also, I think what is very encouraging are the measures that have been taken to revive the liquidity in the system and also for the transmission of rates. So there is a belief among the investors that I speak with that liquidity scenarios will definitely increase for the higher rated NBFCs and companies, and the malaise that we had with credit growth that should ease. Similarly, the problem that most organizations was facing was that the transmission of the rates were not getting was not happening. So I think the RBI has taken cognizance of that, and in the last policy they have making measures to that. So all in all, I think there are incremental green shoots of recovery that we are seeing, and this should revive the sentiments. The flows have been strong, they continue to be strong. So yes, so I think the mood is upbeat. And also in the conference, we have quite a few investors from the European geography that has come down. And as it has been all conferences, people are looking for ideas. They are looking to meet companies. They're looking to see that what can be the companies that can play, that can play if there is a deleveraging cycle going on, and some of the positives that I spoke on.
Ayon, talk to us about how the management commentary is coming from some of the companies which you are hosting, some of the companies you are meeting, or where client interest is high. Management commentary, particularly to their own business, but also commentary on environment. Are they witnessing green shoots? Are they witnessing bottoming out of the worst phase for their respective sectors? Give us some feedback on the management commentary you're gathering.
Yeah, so it's just the early days of the conference. We just had about 2 or 3 sessions yet. So I think it's we didn't have a comprehensive. So maybe if you ask me this question on the 3rd day of the conference, I would be able to give you a better answer. But yes, so speaking selectively to some clients and some corporates, I think the mood is cautiously optimistic. I don't think so. People are overly bullish on growth is picking up. I think as I said, the people do still believe that the growth situations persist, the growth problems persist, but there is a feeling that growth might have bottomed out. But overall, the structural issues that have been plaguing the system for last few years, which was, first, for example, the rollout of the GST or the problems that had with the rollout of the GST, the labyrinthic tax processes there, again, they said the non-transmission of interest rates. So there is an optimism among the management that some of these problems might be seeing a bottom, and we might be not very far away from growth reviving.
In fact, talking of management commentary, M&M, that particular stock yesterday fell very sharply, almost 7-8%, the biggest fall in many years. And the stock in the interim had fallen to multi-year lows today too, at the day's low. Let's hear out the management commentary from there, and we'll take it forward with Ayon after that.
Auto business will be impacted with the BS4 to BS6 transition. We can guess what the impact would be, but I don't think anybody knows for sure what the impact would be. What I can say is that BS4 ramp down and BS6 ramp up. I don't see any risk right now except what coronavirus might do. As I've already mentioned during Auto Expo, that we have one or two parts that are coming from China, which right now are under quarantine. I'm hoping that it will open up in the next week to 10 days. If it opens up in the next week to 10 days, then there won't be any impact. But if it goes beyond that, we would probably have a challenge of about 3,000 vehicles of BS4, for which all the other parts are already in our inventory. We just need to wait for this one part.
Ayon, talk to us about the interest areas of your large clients. How are they witnessing valuations? What are they inquiring to you about? Whether there's interest in broader markets or it's the large caps they want to continue going long on. Give us some flavor of the recent interactions they're having with you, inquiries in particular.
Yeah, so to Lassie, when people were looking at India and when there was this issue with growth, I think then the investment basket narrows down to 15-20 of the large cap names. But if there is a thesis where liquidity will increase and the real interest rates, there's a transmission in the real interest rates, I think then there will be a broad market-based rally. And there, people will be looking at the small and mid-cap ideas. And we have seen considerable interest in the meetings with the small and mid-cap names that are coming to the conference. And looking at some of the sectors which about 5 years or 4 years back was not even in the paradigm of investment, like for example, the insurance sector or the chemical sector. So these are the pockets where, increasingly people are flocking in for ideas, and so we are seeing interest there. But coming back to my earlier point, I believe that if there is a broad-based easing of the issues that has been plaguing the economy over the last few years, I think there'll be a broad-based rally, and the small and mid caps will definitely catch up, especially the small and mid caps which have been painted on with unfairly also with the same brush across sectors. And as I said, if for example, if you look at NBFCs, NBFCs which are having a AAA or AA rating, I think they should be the first that are out of the woods, and people will be looking at them in a better way.
Let me play the devil's advocate. One section of the market also believe that looking at a clutch of 5-7 stocks which have been multi-baggers already in chemicals, even the insurance basket has done phenomenally well in the last 1.5 2 years or ever since they've got listed. Do you think there's kind of a FOMO playing out, and these ideas which you're talking about may be very good indeed, but should only be looked upon as multi-year holding periods and on sharp declines, because some amount of positivity is also coming into the getting captured in the price?
Well, if you wait for a sharp decline, that's being a little tricky there. You don't know. Yes, for the insurance companies, you can say, like just give you an example, like on the day of the budget, some of the life insurance companies fell by quite a large percent, and that kind of events can come, and which could be just seen as an opportunities to buy. But as you said, like a fear of missing out, no, I don't think so. It's like that. I think people are looking at these sectors as pure, like a sort of a quasi-consumer sectors and deeply under-penetrated sectors where regulations are going to get better. And again, they are very, very high quality management companies. So in that way, I feel, it's though the valuations are stretched, but in India, we have seen repeatedly over the years that very, very good quality companies in under-penetrated sectors, the valuation multiples do sustain, and even in a period of hyper growth, the valuations do expand. So in that way, if you're looking for value buys in these sectors, I think that time has gone away. But these are multi-year compounding stories with the potential to even re-rate, not re-rate massively, but also potential re-rate if they consistently go on delivering.
Right. All right, Ayon, we'll let you go on that one. Thanks so much for joining us, and have a great conference. We'll definitely have a word offline as well for all the juicy gossip, which are the blocks which are going to happen, and all the corporate developments that you're gathering. Thank you very much for your time today.